Mozambique, Angola, Namibia, Botswana, Zambia, and South Africa. And we are here today for the West Africa Summit with 25 startups from Nigeria, Gambia, Benin, and Ghana, and obviously Senegal. So it's super exciting. We are able to be here today thanks to our partners, to this community. So I would like to really thank, firstly, the DOR for the incredible support that they have given us. So thank you, Délégué Général. Thank you to your minister, your amazing team, Karine Vavasseur, Tiano Sacco, and everybody at the DOR that has been so great in supporting us all around. So we're really grateful to be here today and to bring the AfricArena experience to West Africa in Dakar. We also want to thank the other partners we have on this program, the French Embassy in Senegal and Gambia, so Adrien said a few words. The International Trade Center, United Nations, Martin, thank you for your support, you and Cathy and the rest of the team. We were able to fly some startups to the program and run the program thanks to you. I would like to thank in particular Zach George, who arrived last night all the way from Cape Town, and I know it's a very long trip to come here. He's already made 2 investments in Senegal and others in the region, and he's come to
Actually, in technology, everybody is talking about, okay, what are doing the investors, how to get the money, we need the money to scale the startups, and we're going to hear about raising funds all the day long. But I mean, if you put 15 investors in a room, how does it look like? What are they talking about? Are they all wearing a suit next to a table, just drinking a cup of tea? Are they super engaged talking about changing the world? That's kind of a big question. And we've got the chance to have 15 investors from West Africa, but as well from some other countries yesterday, and a lot of our dear partners from the Délégation Entrepreneuriat Rapide. So we'd like to give you a few insights about what we've been talking about yesterday. So first thing is there is a lack of funding in Senegal, and investors want to address it. The funding landscapes in Africa generally has been increasingly growing over the few last years. From just $500,000 a few years ago, we've been in 2019, it was like more than $2 billion invested in startups. So that's a huge increase. And you've seen that because there are many more conferences, many more incubators, many more startups, and we are so happy to have these startups today. But we need more funding in some specific countries. In Western Africa, some countries deserve more money than others. You can think especially about Nigeria. But for Senegal, there is still room to increase the capital. And for that, we've seen that there are two main topics. First one is to better match the startups with the business opportunity, with the investors. Money is not so far around, but it may be complicated to have the startups matching with the good investors at the good time and in the good space. And for that, we really need that kind of event, and we really need like tech platform to connect, a moment to network between investors and startups, as what has been done at the VC night yesterday. We also need more investment in the early stage segment. If you see what's happening, we have a lot of great investors coming from the US or from Europe, but more for late venture stage. And there is a lack for helping founders, as some that we're going to see today, to start their ventures, to go from love money, the money from friends and family, and to scale the startup until the point they can get money from bigger investors. So that's the first point investors made yesterday at the conference. Second point is we need a stronger ecosystem to create more investable and scalable companies. What has been said is there are a lot of great ideas, there are a lot of great opportunities to master, but there is we really need to support the founders. And being a founder is not an easy way. You're going to see some of the stories today, but they need to be supported. They need to be trained. We need to explain them, and experienced founders need to explain them, okay, how are you going to access capital? And that's not something super easy. The there is investing a lot of time and energy to change that and make stronger acceleration program, and we really believe it's a really great move, so congrats, especially Karin, we can see at the first round. And we need to show as well what's happening. There are very good successes, but we need to create more role models. We need to show the people that have succeeded. We've got the chance yesterday to have entrepreneurs that came back to explain us, okay, what has been the journey, and we need more great stories to tell. So, and investors have agreed yesterday to take their responsibility on that and to promote these good stories and to better connect within the ecosystem. That's the second point. Third point is, okay, there is an ecosystem and there is a growing number of stakeholders. To grow a startup, it's like the old sentence, you need a village to raise a child. And to be honest, there are more incubators, there are more accelerators, there are more VC funds and so on, but I'm always surprised that even when we do the investors and conference in Cape Town, but it doesn't change, it's exactly the same here. The stakeholders don't know each other for most of them. They meet for the first time. I mean, some of them obviously know each other, but that's not the main thing. And we really need to create moments for this ecosystem to come together and not to replicate the same mistake, but to leverage from what has been learned in different ecosystems, like maybe a bit more mature and from other continents. And they have agreed to go that way. And we need to better understand who's doing what, because there are a lot of new terms that are being used in this ecosystem that are not always easy to understand. So, what's next? We've started to build something 2 years ago, which is called the Digital Africa Collective. And that's something quite powerful. Basically, at the unconference we organized in Cape Town 2 years ago, investor came, didn't expect anything, and finally they said, okay, that's great, we've been chatting together, but what can we do? And they've decided to create a collective together to build something and to work to reinforce the ecosystem. And I'm going to just give you a brief overview of what we're doing. So this is the history. We've been working on different deliverables, but as we are a bit short in terms of time, I invite you then to go to the website and you're going to have the full story of that. Just to give you an overview of the few partners, because it started with 40 investors and we are now more than 60 or 70, I would say, investors, incubators, accelerators, public stakeholders focusing on entrepreneurship in the different regions of Africa. We've been partnering as well with the different investment associations of the continent, FK, IFCA, and SAFCA in South Africa. And so you have a quick view of who are the partners, but again, you can see the full list on the website. But what's most important is our missions. And we are focusing on 4 blocks that I would like to chat a bit about. The first block is how to harmonize investment practices across the continent, especially for early stage startups. The practices may vary from country to country, and it's not always easy for founders, and especially for first-time founders, to know, okay, how can I raise money? What are the conditions? What are the usual practices? It may not be the same, and it's not the same as in the US and in Europe. So we've been working with a lot of investors in different regions to create templates of term sheet, of due diligence checklist that are publicly available and that can be used by investors and by founders to finance their company. That's the first thing. The second thing is we want to facilitate co-investment. So we want to, for that, we want to create that kind of moment that happened yesterday, but that are happening today as well. And we want to give more transparency. As I said a bit before, it may be complicated to know, okay, who are the VCs in the space? Who can I finance me? And so for that, we've created a list of VCs that is freely available, and we've created a list of incubators and accelerators. Again, collectively. It's not comprehensive, but it's at least a beginning, and we really invite you to contribute to that. Third point of our mission is lobbying towards startup acts and investment-friendly regulations. It may not that be easy in some of the countries, including in West Africa, to start a startup, because that's a quite recent phenomenon, these innovative companies. So Senegal has made a very great way a few years ago by passing the Startup Act, one of the first of the continent, and the collective is working to do the same in South Africa at the moment. And finally, last but not least, there is a lot of information everywhere about startups, about the ecosystem, the different verticals and the innovation, but it's not in the same place, so we've tried to gather it in a single place on this website. Okay, you can go on the website, it's digitalcollective.africa. So first deliverables, maybe just to give you an overview, is the list of VCs. So you're going to be able to see which investor is working on which place of the continent, which stage they are investing in, how much money they can put, what are the sectors they prefer, and so on and so forth. So I just invite you to go to the link. It's digitalcollective.africa/VC list. That's the first deliverable. The second deliverable is the due diligence checklist. Things that investors are often telling the startups is, okay, that's great, but we're losing a lot of time because you don't know what are the documents and things that we're going to require from you when you want to invest. So for all the first startup founders in the room, I strongly invite you to go to this list on the website that is going to guide you through the due diligence process that's going to be expected from you. And that's going to avoid you a lot of time wasted. The term sheet as well, it's a bit a barbarian word when you don't come from the startup world or the investment world, but basically it explains, what are the conditions the investor is going to come at the capital of your company. And for that, there are some good practices, and there is a big need of education and understanding from the founders. So we've been working, and it has been led by Endeavor in South Africa, with a lot of founders in different parts of the continent to create a standards document that can be used, and I strongly invite investors in the room as well to have a look at this, as a basic to start the discussion with the startups. And there is also a guidance notes that will help entrepreneurs to know what does it concretely means, dilution rights, etc., etc. So that's as well on the website. So just to wrap up, you will have a lot of these resources and much more. If you're part of this ecosystem, we really invite you to join the collective. We are today, we are trying to do something which is very decentralized in the different regions. We're creating a governance structure for that at the moment, and we have representatives in East Africa, West Africa, Southern Africa, and North Africa. So if you want to contribute to building these ecosystems, and especially the Western Africa ones, just don't hesitate to reach out so that we can add you to the different conversations. Thank you so much.
Thank you, Valentin, for this great presentation. So right now, we are going to receive a very brilliant, very inspiring woman, an all-time great investors in this country. I want to name the managing partner of Bradmore Capital and also co-founder Bradmore Capital, that is an impact investment fund that is looking for high growth potential startups in West Africa, in Francophone Africa. So I want to call Ndei Chow from Bradmore Capital. Send an ovation for her, please. She's going to do a keynote for you.
Good morning, everyone. I haven't been on the stage for 1.5 years before the COVID, so just bear with me if I'm kind of not inspired from time to time. But good morning, everyone. Bonjour, Khoyamura, Molo, Saubona. Welcome to all of you that are here from South Africa, from Nigeria. I'm glad to be here this morning to talk about how to build a successful startup in this region. Before that, I'll just introduce myself and the fund. So I'm Ndei from Bradmore Capital, and I'm here today with Dimitri, my partner. We have been operating in the region in the past 3 years, identifying startups and SMEs, understanding the ecosystem, looking at what's the best investment thesis and our place, our positioning in this region. After 3 years, we have come up with a list of factors that we believe are key for a startup to be successful in the region. Now, mind you, we are not a tech investor, a pure tech investor. We are an impact investor, but with a tech preference. But what does it take to be a successful startup? Before that, what is a successful startup? How do you define that? Some people will say, is it a startup that generates millions of dollars in revenue? Or is it one that's generating millions of dollars in profit? Is it one that's expanding quickly? Is it one that has the right product market fit? Is it one that is generating high returns for the investor? Or is it all of the above? The debate is out. So these are key factors that Dimitri and myself have come up with, just so that I'm not going to be relying too much on him. I'll do mine. So these are key success factors that Dimitri and myself have identified as key for any startup to be successful in this region. First and foremost, it's the team. The team, I won't say it enough. As a founder of a startup, a lot on their MVP. They will spend a lot of time building that platform, making sure that it's working, but not necessarily making the numbers, making revenues, building the track record. So we believe that that's the second key factor that any startup that wants to be successful needs to focus on. You need to build a track record and have revenue growth on a month-to-month basis. The second one is you need to know your market, and you need to know if it's large enough for you to make the revenues and be profitable. If you are in a market that's declining or that's becoming obsolete, you will not be successful probably. So you need to know your market, you need to address the size of the market. Now you will hear this all the time from startups. They'll tell you, we don't have numbers. This region, there is no data. There is no relevant data. We don't know where to find the latest numbers. We have numbers from 2013, and we've heard it all. But you have to do your homework. You have to talk to the key actors in your sector. You have to make up numbers, but you cannot just go like that in the blind. You need to look at numbers and put a number to your market so that you know what part of the market share you can take in a realistic way. The fourth one is a scalable business model. If you have a business model that's that can make you money, but that's not scalable. By scalable, I don't mean just making the numbers here in your initial home market, but you need to be able to duplicate that all over the region. If you are selling insurance, for example, in this region, if you are selling insurance in Senegal, but you don't know how to scale that to Côte d'Ivoire, to Mali, to Burkina, you won't be successful, just by the sheer fact that our markets are small. We have less than 17 million people in Senegal. In Côte d'Ivoire, that's a little bit more than double. So all in all, if investors are coming from outside or us, and we look at numbers, it's more interesting when we do our own due diligence to look at a market, potential market of 130 million, especially knowing that we all have the same central bank, the same regulatory issues. We have the same needs and wants from our middle class and of our lower middle class. So as a startup, you need to know how to build that scalable business model. That brings me to the tech-enabled one. That's why we look at tech, because tech is a way for you to build that scalability and to drive revenue in a more efficient manner. So you need to find a way to really infuse technology in your venture. As a startup, as an impact investor, we are an impact investor, so we do look at impact. For everything that we do, we look at the impact thesis. Is it strong? Is it weak? If it's weak but we like the startup, sometimes we'll try to make up the story to really make it something interesting. But yes, for us, impact is very important. Then unit economics. Most startups that we've come across, 3 years ago and now it has changed, but a lot of them did not know about unit economics.